Hope everyone's doing well and had a good day. This is a recap of the Emini 5-minute chart for Friday, March 14th, 2025. And before I get into it, quite a few people have asked me about the 10+2 factors from Ali, and I've put the link in the description of a few videos before, and I'll try to remember to put the link in the description of this video, but I also just wanted to let you guys know that I'm working on a video where I go over the 10+2 factors and basically just talk through it all and explain it. So be patient with me on that and try to get that video out as soon as possible. But for now, we're going to focus on the recap of the E-mini today. And really the purpose of these videos is to help everyone better understand how to read and trade price action with a focus on breakouts and second legs. So let's get into it. We had a gap up going into the day. There's a bull channel on the Globex session overnight. And on the open, we had a fairly strong rally up to bar 5. The only problem with the rally up to 5 is that it's occurring on the open before bar 7. And there's a higher probability of reversals on the open. You've heard Al talk about opening reversals. Breakouts on the open, no matter how strong they look, have a 50% chance of reversing. So as strong as the rally was up to 5, and the odds were it would get a second leg, you always have to be ready for that opening reversal. It helps to know when there's news as well. We had news on bar 7 today. And that doesn't mean trade the news, it just means be aware that there's news and maybe trade cautiously. Don't be in a trade when there's news, or just at least know that there's news coming if you're in a trade. So as far as the context goes with yesterday's price action, we had a bear trend, a trend line break, retest of the trend's extreme, and then this rally at the end of yesterday and into the open of today could be setting up a major trend reversal, possibly a higher low major trend reversal. So the bulls want a bull trend, the bears want a trading range. They hope the high of the trading range is somewhere up here and that we fall back down to the lows. I also have this red line up here. This is the high of March 12th, 2 days ago, because you can see we broke out above yesterday's high on that rally on the open. So second leg up likely, but opening reversals common and news at 10 o'clock a.m. Eastern Time. So big up, big down on the open. Big confusion. It's a trading range. Both sides expected to get second legs. So we pulled back. We rallied above 7. And the bears had a couple of attempts at a second leg. The bears really want to get one tick below the low of bar 7. The bears want to be rescued. Some unfortunate bear sold the low tick of 7, and now they're trapped on the rally up to bar 8. And they're hoping that the market gets back down to this low and they get a minimum second leg. For me, that's how I define a minimum second leg. Everyone really has their own definition. So it's important to ask yourself, what does it mean for a breakout to get a minimum second leg? And it's really, I want to make a point that it's important to ask yourself what your definition is for everything, because people's definitions can differ. So what one thing means to one person might not mean the same thing to another person. Especially in trading, it's so subjective. So make sure you're clear with your own definitions. And that, it helps to do the level 2 study. The level 2 study is challenging because it forces you to define things and then redefine things as you discover new information. And on that topic, the level 2 study, I do plan on making a video about how to conduct a level 2 study, but I'm just not ready to do that yet, as I'm still figuring that out myself as I go along. But anyway, back to the review. I said big up, big down, big confusion. Bulls and bears expected to get a second leg. The bears had a couple of attempts. Now we have a good, strong reversal bar 11 for the bulls. We have, you can call it a truncated wedge, 3 attempts down, 1, 7, and 11. You can call it a high or low double bottom, but all the bars are above the moving average with strong buying pressure. And the bears had a couple of attempts down, and the bulls still probably will get a second leg. So bar 11 is an always in flipping bar, meaning if you're short, you probably exit above bar 11. And if you're flat and you're a bull, you can buy above 11. So then we rallied, and you can see as we had approached the high of the day at this point, the bar 5 high, we started to lose momentum. But look in here. We have a spike in channel for the bulls. What do the bears have to sell? This is one of those situations where trading with an always-in mindset can help. If you're a bull and you say you buy above bar 11 and you have to exit below a reasonable stop order sell, you have to get out below a reasonable sell setup. Do you exit below 17? No. Do you exit below 20? No. What about over here? Probably exit below 31. It's a reasonable sell. It's a double top after 3 legs up. So if you think about it, if you bought here and you had an always-in mindset, you could have held all the way through until the second reversal on bar 31. 18 and 19 probably reset the leg count. We broke out and got follow through above the old high of the day. And it's a big enough breakout, strong enough breakout to expect at least a second leg. So we have a weak reversal attempt, 20. Is it a reversal? Is it a pullback? It's probably a breakout pullback, and then a high 1, 21, second leg up to 23. But this 3-bar micro channel was strong enough for its own second leg. So probably buyers below, second leg up likely. And then we rallied to 27. 27 is a late leg. It's also nested, so depending on how you look at it. 3 pushes up, 1, 2, 3. But also 3 smaller pushes in here. 1, 2, 3. And when you get late legs, reversals become more likely. So you have to be cautious when you're trading a late leg and be ready for a deeper, more complex pullback, if not a reversal. So 27, maybe not an ideal place to buy. You're really going to reduce the probability on the breakout 27 because it's a late leg. And the bulls attempted to get a second leg. It looks like they tested the high close of 27. So what happened? Traders buy the close of 27, disappointed 28. So the bulls are trapped into a losing position. What are those bulls going to do when we retest the close of 27? You can see what they did. Buy the close 27, disappointed 28, 29, retest on 30, and everybody sells. Bulls exit their longs and bears sell to capture a second leg down. And then we got the micro channel down to 33, and that might have been strong enough to reset the leg count. It's not entirely clear if this is leg 1, maybe this is leg 2 and leg 3, or if the leg count reset here and we got leg 1, pullback, leg 2. But either way, this micro channel down to 33, 34 was strong enough for a second leg. You know there are trap traders above. These are, and this is sustained selling. It's a stronger test of the moving average than the bulls wanted to see. The first reversal up will probably fail. So probably sellers above for a second leg. High probability trade, but high probability means bad risk reward. So you don't get high probability and good risk reward. So sellers above for the high probability scalp. The bears get a second leg in the form of 1 bar, 36, and then we resume back up. Now, this might have been enough of a trend line break to convert the market into a trading range. We have a tight bull channel, but then a strong trend line break, and then a retest of the trend's extreme. And what happened at the trend's extreme? At this point, we're either in a trading range or a bull channel. So what's the expectation at a new high? The expectation is that there will be sellers at the new high. Traders who bought up here and did not exit here on 30, they're holding, think about if you're holding a long position through this pullback. That's a disappointing pullback. And if you're given the opportunity to exit your long, take profits at the high of the trend, you might take it. And the bears see this sell-off and they think, this was strong enough for a second leg. I'm not sure if that was enough of a second leg. This might be this is a tight enough channel down to 36 on a higher time frame that this breakout will likely have sellers above and then get its own second leg down. And that's what we got. So we got trend resumption, but look at the resumption of the trend. Rally to 38, pull back. Rally 39, pause. And then another rally, 41. That's 3 pushes up, and then even a fourth push up, 43. But 4 legs up to the top of a range. Low probability for trend resumption, higher probability the market reverses. We get mean reversion. We fall down to the middle of the range. So up here, the bears, they get a 3-bar micro channel down to 47. It's enough, even a 5-6 bar micro channel, enough selling that the first reversal up will probably fail, and the bears will likely get a second leg down. We may even have to test the close of 36. The odds are we'll probably at least test the high of 37, the buy signal. This is I don't talk much about this, but this is an I1R. So we have a reversal bar, bear bar, bull bar. The bull bar goes for 1R and even more. When you retest that stop order, there's usually support here. Buyers here for scalps. And in this case, we went higher. So micro channel down, all the way down to 52. First reversal, probably minor. We get a low 2, bulls get 2 reversal attempts. 55, really needed follow through. Tight bear channel, 2 legs against it, might be a second leg trap. And the bulls failed to get good follow through, 56. So they bail out of the trade. Bears sell aggressively. We get 1 more leg down. And this leg down, even though it's a micro channel, 56 through 59, subdivided into 2 smaller legs, 57, pause, and 59. And now we have maybe 1, 2, 3 pushes down with the third push, again, subdividing into 2 smaller legs, and it's even bigger double bottom in what might be a bull trend. We're still getting higher highs and higher lows. So 60 is a bar that's similar to bar 11. And I didn't mention it on 37, but these are all similar bars, which are always in flipping bars, meaning if you're short, you exit above 60. And if you're flat, you can buy above 60. So traders probably buy above 60. Bears don't look to sell again for 10 bars and 2 legs. And bulls re-enter their swing trades looking for test of the highs. It is a bull channel. We have a slightly higher high here. We draw a parallel. You can see it's a bull channel. Market tried to break below the trend line and failed. Weak breakout, very small breakout, and then no follow through. And then a strong reversal, 62. High probability, 60 through 62. Gets a second leg. Looks like in this case we got about a 50% pullback, depending on how you draw it, but we pulled back to about 50% during 66 and found support. The bulls got a second leg to 69. 69, this rally might be strong enough for its own second leg. One problem with it is it might be a late leg. 1, 2, 3 pushes up to the top of the range. So you might get a deeper pullback. But what about selling below 70? You're selling against a pretty strong rally. Overall, the day has been more bullish. 70 might be a reasonable sell, but this entire rally to 69 might need its own second leg. It might be a tight enough channel to get a second leg up. And you can see we came close to the low of 66, where traders got trapped on this rally. What happened on 66? You had bears who sold, they got trapped into a losing position. Bulls who did not buy here trapped out of a winning trade, also looking to buy. It's interesting too. This happened a couple of times today. I'm not going to go over every example, but 66 was about a 50% pullback of this 3-bar micro channel. And I know that because it's my system. And I actually missed the entry. I trade the SPY. The price action is basically the same, but that's why I'm going to say, instead of saying tick, I'm going to say cents. Bar 66 missed my limit order entry price by 1 cent today. So I was a bull who was trapped out of a winning position. And that's just the way it goes sometimes, at least for now. It's a little frustrating, but that's just the way it was. But that, demonstrates the point. You have bears who sold the low tick, 66, trapped by the rally. They're hoping for any retest to exit at break even, exit their original price. If they scaled in, they can make a profit. Then you have bulls who did not buy. They missed the rally. They're also looking to buy to capture that second leg up. Look at the approach down to 75. It's small, but small sell climax, pause, sell climax, pause, sell climax. This is 3 legs down, double bottom after a strong rally. So 75, another always in flipping bar. If you sold below 70, you got to get out above 75. The bulls got their second leg, and we tested the high of March 12th. You can see the reaction there. Lots of profit taking. We fell back into the range. That's going to be it for this review. Thanks everybody for watching, and I hope everyone has a great weekend.